evening, everyone. All right, are you able to hear me? If you can hear me, please type what did you have for your dinner. All right, please type what did you have for your dinner if you can hear my voice. In the meantime, I'm just going to the Facebook group to make sure everyone can hear me. Okay, let me just double check. All right, go to the next level all-star Facebook group. If you have not joined that, we actually have like almost daily content inside about investing, about business building. There's so many things that we actually talk about. Unisan curry vegetable. All right. Gary is tagging Eunice, I think. All right. So that means you guys can hear me, right? Okay, fantastic. Great. So Leslie had curry rice or curry vegetable. And yeah, Joanne also had vegetable and chicken as well. Hello, good to see you. Hi, some people are watching from YouTube. Okay, Gary had noodle. Fantastic. All right, just now what did I have? I actually had this as well. Okay, same as Joanne. I had vegetable with chicken. All right, so all of us can get started really, really soon because all of us can hear me. And let's get started, right? Today we have really a lot of things to cover, all right? Especially how can we actually have a 70% year-on-year return very, very safely. This is the secret strategy that I want to reveal to you very soon, okay, regarding options, okay? But before that, okay, before we go into that strategy, right, I also want to congratulate, okay, everyone for celebrating today's, it's a public holiday, it's a Visa day, okay? So just let me share the everything so that we can get started. So happy Visa day, everyone, and I hope you had a wonderful celebration. I'm very happy that despite that it's a public holiday, you decide to join here so that you can continue to improve on your investment and continue to increase your wealth as well. So happy Visa day, everyone. All right. So for those who are still watching, okay, do come in right now. I can see all of you are here and I'm also watching your comments. All right. So if you have any questions in between while watching this sharing, just put in your questions inside the chat. And yeah, continue to I will ask you some questions as well. So do participate so that we can really make it interactive as well. All right. Interactive. All right. So since it's Visa day, today, if you stay all the way to the end, right, I would also like to give you a gift, all right? And this is a very, very special gift that we have actually never given out to people in the public. Like, for example, in Endless Facebook group, right, it's considered public, right? So this is a very, very special gift. So do stay all the way to the end. And I promise you that this gift can help you to become a better investor as well, okay? It's a very, very wonderful gift. So for those who are the first time seeing me, my name is Chloe, and you can actually follow me at my Telegram channel where we actually post very, very often about my investment insights. And if you do want to have a summary, for example, right, after this whole sharing, like close to an hour or so, right, if you want to have a very summary as well as some of the gift that I'm going to give out to you very soon, then do follow my Telegram channel, t.me/alligatorinvestor, okay, because I really love Japan and I do think that there's a lot of investment philosophy that we can actually learn from the Japanese as well, right? They are really, really great in terms of how they live their life, as well as actually some of the principle you can use it to improve yourself as an investor as well. So do follow me and yeah, let's get started. All right, so before I share with you this 70% safely year-on-year strategy, all right? Some people actually, inside in my Telegram channel as well, some people actually voted this. Is this even real, legit or not? Is it like some kind of scam? Maybe some of you may be thinking, is it even possible to do that? I just have to say that this strategy, I actually back tested it, all right? I back tested about 11 years, all right? So I actually backtrack the data, whatever things that I can find from what's available in the trading platform. I back tested this result for 11 years, and that really, like based on the results I saw, right? It's like a 70% year-on-year return. So if you want to, after today's sharing, you can continue to do your own back testing, so that it can increase your confidence as well as increase your understanding towards my strategy as well. So once again, okay, if you understand the importance of do your own diligence, right? Okay, DYODD, please type DYODD in the chat. Okay, please do not just copy blindly. Make sure you can rewatch this replay so that you can really understand the investment philosophy and why I do what I do and why I present this way, okay? So that you can also internalize and become like really like implement this strategy safely for yourself as well. Okay, so firstly, very, very, very important, DYODD. And I need everyone to type that inside the chat. Okay, type that inside the chat so that I know that I can share with you this strategy very openly, and because I know you will also do your due diligence as well. Okay, this is a back test, 11 years result. And how did I actually get this inspiration from? Because as just like all of you, right, I'm also constant learning from people, from investors. Like I do have a lot of, I think I'm considered very fortunate to constantly surround myself with really great investors, and one of them is actually Sean. All right, so I'm not sure whether you have watched this video. Actually, he posted onto his YouTube channel. Yeah, you can go and follow him every day. Sean, he actually posts a lot of investment insights as well as some workout. You can see like super fit, right? Like he's a one punch man. All right, so you can go and follow him. And this is the video that he actually just posted about 2 days ago on this strategy called Parakoopa strategy. Any one of you have actually watched this video before? If you watch this video, please type Parakoopa inside the comment. All right, you have watched this and you actually really like wow by this strategy, right? Please type Parakoopa strategy. And whatever things that I'm going to share with you, it's an adaptation as well as an improved, all right, further enhanced formula, right, enhanced version of whatever Sean actually presented. So after this sharing, if you do want to go and watch Parakoopa strategy, go to do that so that you can also understand where did Sean come from and how did my strategy actually help to complement in fact, in my opinion, it's an enhanced version of Parakoopa strategy as well. Okay, but what Sean mentioned using Parakoopa strategy, this is the back test result as well. So he also back tested this Parakoopa strategy for a decade, right? And then every single year, okay, the return using this Parakoopa strategy, it's about 47%. Right, which is actually considered very, very good, right? Okay, Gary or also know Sean, right? I believe you will watch this sharing before, right? So this is a 50% year-on-year return using the Parakoopa strategy. Super powerful, all right? But the strategy that I am going to share with you right now, it's an enhanced version. That is why it's going to be even more than that. So based on my back test, okay, and later I'm going to show you how exactly did I do my back test so that you understand the investment philosophy behind that, right? That is giving us a 73% return year on year. All right, so Nicholas is asking, where did the Parakoopa strategy come from? Okay, well, I think he got it from, well, the Parakoopa strategy. Well, he played games and he really liked this name. It's like exponential return, and that's why he named that way. Okay, so there's a lot of times like this strategy, he just randomly thought of, oh, this name is applicable, so that's why he just named it, right? So later on, I'm going to have a name for my strategy as well, okay? And I will share with you how come I got that name. But this strategy will help you to have a 73%. Yeah, it's a Super Mario game. So based on the Parakoopa strategy, the stock, in fact, I don't consider it's a stock, but it's like a ETF, right? He actually used it on an ETF, and that is called S&P 500. And can you just, from a first glance, right, what trend do you see for S&P 500? All right, so for those who don't know what is S&P 500, okay, let me explain to you right now. Basically, it's like the US largest top 500 companies. So this index is tracking the performance, the stock price of these companies, and it's a very, very good to us. It's like a benchmark of how is the US economy doing. All right, so when the economy does well, these companies make more money, then they make more money, the stock price increase, so will SPY, all right, which is the ticker symbol for S&P 500. So you can see that, all right, on a very, very first glance, okay, if you're given enough time, SPY, okay, keep on increase in prices, right? It's a very, very obvious uptrend, all right? In fact, how much has it increased over the last 10 years, all right? That is 210%, all right? So 210%, all you need to do is to buy SPY and you buy it as a stock, okay? You hold it, you don't do anything. 10 years later, your wealth actually increased by about 200%. So what kind of companies is SPY tracking? Now, let's take a deeper look inside. And basically, as a SPY, it tracks many different companies, the top 500 companies in the US, right? So the top 10 holdings, it's listed here, right? You have your Apple, you have your Microsoft, your Amazon, your Facebook, your Alphabet, which is your Google, right? Berkshire, JP Morgan, J&J, Tesla. So 10 of the top 10 companies, right? Top 10 companies made up about 26% weightage of this whole ETF, right? However, it also has other sectors, right? Apart from the tech sector, which you see, which is occupy majority of the top 10 holding, right? But it actually has a very, very balanced sectors as well, like different sectors all coming together. You have your consumer cyclicals, you have your, such as your Starbucks, your Nike is also inside, right? You have your financials, which are your banks are also inside. You have your healthcare, like your Pfizer, right? And every other thing, right? Utilities also have, energy also have. So everything, all the 500 companies, right? They all make up to be SPY. Now, 20K become 4 million. Okay, Ziming was like, what? Okay, let's take a look later, right? Let's take a look. Is it even possible for 20K to become 4 million in 10 years time? we will actually look at it later on, right? So now let's look at this SPY first. Okay, out of so many sectors, right? Now, let me ask you this question. Which sector do you think has the most growth potential, right? Because we have your technology, you have your consumer cyclicals, you have your financials, your healthcare, your basic material, utility, energy. Which sector do you think that actually has the highest growth potential in the next 10 years? All right, we're talking about future growth, which just from your everyday life, what do you think will be the sector that will continue to grow fast? And in fact, it will actually grow faster as well. Okay, type in your answer. Okay, some of you are already typing Nasdaq, QQQ, which actually more skewed towards the tech, right? Which is more skewed towards the tech. And in fact, I personally also agree, all right? Gary said it's tech and healthcare, technology. Trina says healthcare, Trina says it's tech as well. Jack also says it's tech, right? In fact, I also agree, all right? Tech, it's a very, very high growth sector because we are surrounded by tech every single day, and the speed of how tech evolve will just continue to accelerate, right? Because we are getting more and more developed, all right, as a nation, as a whole world. However, all right, some of you may be thinking, hey, if I just invest in tech, would it be a little bit risky? Because at the end of the day, sometimes something can happen as well, right? The whole tech sector can have a severe drawdown should anything happen, right? For example, last year, we didn't expect COVID-19 to be here. And because of COVID-19, so many businesses, so many sectors were actually affected. On the other hand, tech was a boom because it really helped to accelerate, right, the growth of a lot of different areas in the technology industry. But of course, we can never say for sure. Maybe in the future, something will happen and tech will be the area that got affected, right? So that is why it's still safe to actually look at, holistically, not just tech, but together with some other sectors that can also help to stabilize the growth, right? So that is why instead of focusing on one single sector, which is tech, let's look at a more diverse, slightly more diverse, but at the same time, it's relatively tech focused. And in fact, one of you have already mentioned the ticker symbol, Ken, right? Ken, he actually mentioned about QQQ, all right? And one of you also mentioned about Nasdaq, right? So QQQ is actually one of the largest, in fact, the most actively traded, all right, Nasdaq 100 ETF, right? So for those who are not familiar with Nasdaq, it basically is a basket of 100 largest as well as the most actively traded US companies, right? Listed on the Nasdaq stock exchange, right? So QQQ actually track the Nasdaq 100, right? So in this case, of course, there are different ETF tracking Nasdaq 100. QQQ is just one of them. And in fact, it's also most actively traded Nasdaq 100 ETF. And what is so, I think in my opinion, in a way it's good for QQQ is it has a huge tech exposure, but at the same time, this is not purely tech oriented, right? So that's what I mean by it's a relatively still balanced. You still do have other exposure as well. So now let's take a look at what are the companies and what other sectors as well inside QQQ. And we have our technology, which is occupying more than 60% of the ETF, all right? But it also has other sectors such as your consumer cyclicals, including what I mentioned, your Starbucks, right? Your Nike, right? You can also have your healthcare inside, non-cyclicals also inside your very strong supermarket like your Walmart, your Costco, right? So there are different exposure inside. But once again, it's relatively focused in the tech. So if you look at the top 10 companies, all right, inside the top 10 holdings inside QQQ, you can see actually pretty familiar names that you actually saw just now in SPY. But right now, their percentage, their weightage, right, it's so much higher compared to SPY just now. So right now, Apple actually occupied 11%, Microsoft close to 10%, right? So Amazon 8%, Alphabet Class A, Class C made up together to be about 7%. So the techs definitely occupy a larger percentage. And that is why the top 10 holding in total in the end occupy about close to 50, the top 10 holdings are more than 50% of the whole portfolio, all right? But one thing, like I mentioned, I like QQQ because it's not just tech, right? It also has other sectors as well. That kind of help to balance out, right? So now, let's take a look at, okay, why don't we just trade Nasdaq directly? And Nasdaq is too expensive. Okay, Gerald think that in terms of the price right now it's too expensive. Well, we can take a look, okay, is this expensive right now? But if we just look at the stock price of how QQQ has performed over the years, okay, once again, this is a very, very obvious uptrend, right? And what is the ROI? If you just buy QQQ, that means you don't do options or just buy the stocks, okay? Outright, 10 years ago, you sleep for 10 years, your portfolio will have increased by 400, okay, close to 480%. Who actually think that, wow, 480% in 10 years time is considered very, very good return? If you think it's good, right, please type good in the chat, all right? So in my opinion, I think it's a fantastic return. But once again, all right, can we do better? Definitely we can do better. And that is why I want to share with you the strategy very soon. But some of you just now mentioned, right, Gerald said that, hey, Nasdaq is too expensive. Then is it not the right time to invest in QQQ right now? Now, let's take a look at the valuation of how can you really know whether is this a right time to buy into QQQ as an ETF or not, right? So based on the comparison between QQQ and SPY, let's take a look, all right? So this is the PE ratio of these two ETF. And you can see that QQQ, now the PE ratio is 24 times versus SPY is 43 times. For those who understand what is PE ratio, right? Can you let me know the answer? Do you prefer higher PE ratio in terms of the valuation wise if you were to buy? Do you want it to buy at a high PE or a low PE? Type your answer inside the chat. You want to buy high or you want to buy it low? Okay, so for those who don't understand PE ratio, okay, basically it's like a market sentiment. How many times is the market willing to pay for the current earnings, all right, of the companies adding up together? So in this case, it's the ETF, right? Yes, exactly. So many of typing low PE, right? And if you talk about SPY right now, it's 40, over 40. To me, it's really considered high. However, what happened recently due to the tech correction, right? For the past like few months, tech has been dropping. And as a result, actually, in terms of earnings, right? If you just observe the earnings of those tech companies, be it Facebook, be it Apple, be it Microsoft, right? Amazon, all of them make more money compared to last year. Every single quarter, like due to COVID-19, right? Actually, they increase their profit even further. So their EPS are actually increasing, but the tech is correcting, and that's why the price are dropping. So as a result, the PE ratio of the ETF, okay, actually talking about the tech sector, is actually becoming smaller. So in this case, QQQ is actually much better price compared to SPY. So if you were to ask me, hey, do I want to invest in QQQ or SPY right now? If I just buy the stock, right, I would also want to go for QQQ because it's much fairly priced compared to SPY. And really, like, companies are inside QQQ, they are very, very strong. The top 100 companies are top 100, not top 500. It's top 100 companies inside the Nasdaq exchange. Super, super solid company. So do you think 24 times PE ratio is considered fair? If you think it's fair, right, please type fair in the chat. Or do you still think that it's expensive? All right. So in my opinion, I really feel that 24 PE ratio is considered very, very fair for like really growing companies, right? Like the companies that you just saw, right? Super amazing companies that are just 24 times. I think it's really, really fair price. Okay. But on the other hand, I don't have time to go through nitty-gritty about how you can select a good ETF. Of course, there are certain criteria that you actually need to look at, all right? In order for you to start investing in ETF, you need to have a better understanding apart from just PE ratio alone. So I personally actually have a course that I actually talk in depth about how can you select ETF. And in fact, some of the ETF that I actually talk about in this course have gone up like 40% over for the past 1 year. So yeah, just to let you know, but I do want to give away this course as a gift, all right? So like I mentioned, do stay all the way till the end or follow my Telegram channel if you want to really learn, understand how can you actually claim the gift that I'm going to give you very soon, all right? So this is the first special sneak preview that I want to give it to you, all right? Very fair, right? Some of you are talking about, yeah, it's fair, right? So now, let's continue to look at QQQ. So for the past 10 years, the ROI, if you just invest, buy the stocks and hold, you will have gotten close to 480% return. But can we do better? Now, that's when we talk about a strategy that I'm going to review to you very, very soon. Let's just assume that, okay, let's use $20,000 as well. Since Sean, he used $20,000 capital as an example as well in his Parakoopa strategy, right? So I'm also going to use the same amount so that it's an apple-to-apple comparison. If you just use $20,000 to invest and you just buy the stock, right? So what can you do? And let's just assume $20,000, you invest once, that's it, okay? We don't top up any more money, okay? If you have additional cash, okay, we just, invest in something else. Just make the initial investment to be 20,000 and that's it, okay? That's the assumption. And if you backdate, okay, I actually help you backdate already. Back then, on 2011, all right, May 31st, which is about 10 years ago, right? QQQ stock price back then was $58.36. So if you have a $20,000 capital, you would have gotten how many units for yourself? Okay, one unit means one stock in this case. So you use 20,000 divided by 58.36, you got about 342 units. And once you buy the units, you just leave it, Okay, you just go and do something else. Okay, you sleep for 10 years also can. And by the time you wake up, all right, what is your portfolio size? How much has your portfolio grown, right? Now, let me share with you this Excel file that I also created using the modification that Sean did using his parabola strategy. Okay, let me just unshare and share the Excel sheet. Hold on. Stop screen and share again. Right. So for those who actually find this webinar, like whatever things I'm sharing right now, is it helpful? If it's helpful, right? Yeah, please just help to like and share this video out as well, so that really more people will get to understand how can they actually invest safely at the same time profitably as well. Okay, don't really need to go for very advanced or very like very risky strategy. You can do things very simple. At the same time, you can still make money safely. So help to share it out. All right. So in the meantime, I'm just going to share my screen. Okay, here you go. Dun, dun, dun. All right, so this is the Excel type, sheet that you saw just now. Yeah, so 58. Okay, you use $20,000 capital, you divide. Okay, that's how you get the about 342. So you buy 342 units, and how much would it cost you? It costs you about 20,000. So you still have about $40 left, but just ignore that. All right, so 10 years later, right, from 2011 all the way until 2021, which is this year. And let's just use today's stock price, okay? Just use today's stock price as a reference, all right? What you need to do is, you can see that, hey, how do I go down? Okay, you can see that, okay, the stock price right now times the number of units that I had, which is 342. I didn't touch, I didn't do anything, I just let it continue to hold and run for itself, right? So you would have, okay, your capital right now, okay, instead of $20,000, it would have grown to more than 100K. All right, which is 113,544. This is the amount that you will be getting right now, and your ROI, okay, which will be around 460%, which is similar. Okay, just now I was showing 480, right? Because I use a different starting number, all right? But it's almost at about 480%. But of course, what can we do better? Now, let me go back to the slides. Okay, how can we increase our return better? Apart from just buying stocks, what else can we do? All right, what else can we do? So some of you are wondering, hey, can I share the Excel spreadsheet? Okay, join in my Telegram channel, because I don't have the Excel file right now with me. I cannot just share with you directly. So do join my Telegram channel. Later on, I will actually put the spreadsheet inside my Telegram. I will just share it there. So just join that. Later on, I will be able to share with you as well. So let me stop share and share back my screen on the slides. Okay, so now how can we increase our return further? All right, some of you are very smart. Some Ismail was saying that buy options, okay, using the power of options. All right, indeed. All right, and I actually call this strategy Super Mario strategy. All right, why Super Mario? Because Super Mario is a hero, and that's why he always gets the best, and he can, like, now he's literally flying, right? So this is like a Super Mario strategy as well. Okay, I'm very creative, right? So yeah, how can we use Super Mario strategy? And it's gonna be a 10-year plan. Okay, guys, please type 10-year. It's not like the 1 year and then the next 1 year you're going to become a millionaire. It's not going to be like that, all right? But it's a 10-year plan. Please type 10-year in the chat, okay? Because in order to execute this strategy well, it requires patience, okay? It also requires persistence as well as discipline in making sure that you stick to the game plan and you just do it again and again every single year, all right? Same for parabolic, okay, I forgot the strategy that Sean mentioned. Same for his strategy as well. It's a 10-year plan, and you need to stick to the plan. And the same thing for Super Mario strategy as well. So this is where I'm going to introduce this concept called options, all right? So for those who have attended OMI before, you can type OMI in the chat, all right? However, if you're new, you can also type new in the chat. If all of you have attended OMI before, probably I don't need to explain the concept of options. However, if there are some beginners, just type new so that I will go slightly slower to explain to you what is the concept behind why we do what we do. All right. So Mike is from OMI, Rainy OMI. Hey, oh, okay. I saw two new people, okay, Trina as well as Handy, okay. So we go slightly slower so that we do have some beginners here as well, so that everybody will get to benefit, okay. But of course, if you want to go for like I can't go very in depth. So for those who really want to go like super in depth, do go and attend OMI. It's a super solid course in my opinion. But let's just talk about options first. And actually, there are only two types of options, okay, that you can invest. Okay, the first one is called call option, and the second one is called put option, right? And today, in order to execute Super Mario strategy, you need to use call options. All right. So what is call options? Okay, and what is options actually, right? So actually, options is very simple. It's just a contract. All right. And what does a call option actually enable you to do, right? So for us, in order to execute this Super Mario strategy, we need to buy this piece of contract. And why do we buy this piece of contract? It's because, okay, instead of forking out a lot of money to buy the stock, okay, for example, just now, if you still remember, how much is 332, right? Right now, the QQQ stock price is 332, right? If you need to fork out money, let's say you want to buy 100 shares, you need about $33,000, which is actually quite a lot of money. So that is why if you actually use the power of options, you can actually reduce your initial upfront capital. So what does that mean is, instead of buying 100 stocks, you go and buy a call option contract. And this call option contract, right, will actually enable you to lock in the price for today. So for example, right now, let me just use this water bottle as an example. So this water bottle, let's imagine, wow, this is a very precious water bottle, right? Have a lot of high growth potential because it's made out of very special material from the space, all right? So right now, this water bottle is selling at let's say $300. Okay, let's say $300. And you believe that eventually this water bottle will go up in prices because it's a very precious metal. It can go up to, let's say, $500, $600, right? But let's say today you don't have the money to buy this water bottle at $300. What you need to do is you can buy a piece of contract. Okay, you can get a piece of contract, and this contract will enable you to buy this bottle, lock in the price at $300, right? And you can lock in for a period. And let's assume it's a period of 2 years, all right? So within these 2 years, okay, you can always come back to buy this water bottle at $300, all right? So let's assume about 1.5 years down the road, this water bottle indeed, okay, increase in price from $300, now increase to $600. So right now, because your contract is still valid, it's still within the time frame that you purchase, right? Because this contract will allow you to buy this water bottle anytime within 2 years at $300. So as a buyer, as me holding on to this contract, I will definitely go and tell the seller, say, hey, you know, now the price of this water bottle has increased to $600. But remember, I buy this piece of contract before, and right now I can actually use this contract to still buy this water bottle at $300 because I actually lock in the price for this water bottle at the beginning at $300. So I can actually right away buy at $300 and sell to the market, right, at $600. That's how I profit that $300 difference, right? So in order for you to actually, you know, have these rights to buy this water bottle, lock in it at $300, you need to pay some money first. And that is why we say that as a buyer of this call option contract, you have to pay some money first. All right. So of course, okay, now if it's the first time of you understanding about options, it can get a little bit confusing. Now let me just go to the Excel so that I can explain to you, and at the same time I'm going to open the trading platform so that it's easier for you to visualize as well. Now let me just go back. okay? And go back to my Excel. Remove, stop screen, share the Excel file here. Now, so with this, what I just talked about, right, is call option. So why do I buy this call option? Because I believe that, okay, QQQ will increase in price given time, because it's like a tracking top 100 companies in the Nasdaq, right? At the same time, a lot of companies that it's tracking, right, they are really high growth company under the tech sector. So I believe given time, Nasdaq or QQQ will increase in price. So what I need to do right now is I go and buy a piece of contract. I can lock in the price right now at a cheaper price. So even though the stock price go up eventually, I can still buy it at a cheap price, right? This is what I mean by actually locking in the price. So now let's take a look at this is a call option that I want to explain to you. How did I get all these numbers, all right? How did I get all these numbers, right? So let me share the whole screen so that you can see. Yeah, instead of sharing individual. Okay, I think I'm sharing screen 2. All right. So yeah, okay, now you can see my whole screen. So this is Thinkorswim trading platform. For those who have attended OMI, you will be familiar with it. All I need to do is I go to QQQ, right? You can see this is my ticker symbol. And I want to backdate so that you can see how QQQ has evolved and how QQQ options, the call option, right, you lock in the price at a cheaper price, will evolve over time as well. So back in 2011, May, it was, okay, how much was QQQ per share price? $58. Can you see that? Okay, $58.36. But our Super Mario strategy is not buying stocks, okay? We are not buying stocks. We are buying a call option. So you can see there are a lot of things below, right? What we want to do to execute this strategy safely is to buy the longest call contract, okay? Guys, please type longest, okay? Longest in the chat, all right? So why we want to buy longest? Because we want to make sure the time doesn't decay so fast, okay? So for those who attended OMI before, you will know that buying a piece of paper, buying a piece of a contract, as time goes by, closer and closer to expiry date, the depreciation actually comes in faster, right? That's called time decay. So we want to minimize the time decay. That's why we buy the longest, right? So the longest we can go is 598 days. So that's where we go. So now you click this, and there are so many different numbers, right? Just keep it simple. So the stock price back then was $58. And this is like 10 years ago, right? So what we need to do is just to buy a call option at one strike below the current stock price. So the current stock price is 58.36. We buy one strike below. That's why we choose 58, okay? As long as it's smaller than the current stock price, and it's just one strike smaller. So that's what I mean by one strike. So that's why we choose 58. And then you can see that you mouse over, you can see there's a small buy icon, right? You just click that. Okay. So once you click it, you can see that in order to buy QQQ call contract back then, how much do you need to invest? Okay. It is actually this amount. Okay, this is like a mid price that you know, you can bargain a little bit. So basically, you pay 6.075 per contract. And those who have attended OMI before, you would have already know that 6.075, it's one share. But options is always controlling how many shares? How many shares, guys? Do you still remember? Controlling how many shares? Controlling 100 shares. So in this case, all right, how much do you need to pay in terms of premium? It's actually $607.5, all right? $600.07.5, okay? So this is how much you have to pay. So that's how I go back to my Excel spreadsheet, all right? So that's how I inserted 6.075, all right? So if I round it up, okay, it's about $608, okay? And with 20,000 capital, all right? Once again, it's just one-time investment. The rest, just let it compound, right? With a $20,000 capital, how many contract can I buy, right? So I can buy 20,000 divide by 608. And that's how I get this 32.92, right? And then, because I cannot by 0.92 contract, I need to round it down, and that's why it's just 32 contract. Okay, makes sense? So 32 times 608, how much do I need to invest? I need to invest about this amount. So this is what we initiated the position. Okay, so some of you, Amos is asking, is this the Sean Xia's strategy? This is an enhanced version, okay, even in like improved version from his strategy, and this is called Super Mario strategy. Okay, now let's take a look at later on, right? So 1 year later, because this is like a 500-day contract, yeah, remember it's a 500-day contract, close to 600 days, right? 1 year later, what do we do? So since we initiated this contract on 31st of May, what we need to do next is very simple. Every year, 31st of May, you just go back to your account, go and close your position. That means you go and sell back this contract, because you buy this piece of contract, you invested some amount. Right now, okay, you just sell it back to the market, okay, because there's still validity. You can still go and sell away. So how much can you sell? Let's just take a look. You go here, all right, and then you just go to next year, 2012 May, and I choose 31st of May because 1 year has passed, all right? So you can see that 1 year has passed. So originally, my expiration date was 18 January 2013. And I'm going back to the same contract. You can see that 18 January 2013. Now, I only left with 232 days. How come? Because 1 year has passed, all right? From 600 days, 1 year passed by. That's why this contract right now only has a validity of 232 days. And this is exactly what we need to do. We need to sell it back to the market, okay, before this contract continue to become shorter and shorter. So we just sell it back. So how much can we actually buy, okay? How much do we actually sell? Okay, right now, okay, remember your strike price was 58. Now, actually the stock price of QQQ has increased from $58 1 year down the road to $62, right? So you actually make some profit buying stocks as well. But now we are talking about buying option. Now let's take a look at how much profit did we make. So from originally, we invested $6.75, right? Now we go back to the same $58. Can you see this? Okay, this is the exact contract that I bought. Now I just need to sell it back. So all I need to do is mouse over and I click sell. Can you see this? Exactly the same thing, 58 strike price, same expiry date. Now I just basically sell back this call contract. How much would I collect back? When I sell, I will receive money, right? So can you see that it's 7.03? So that means for every single one share, we collect back 7.03. But because one option is always 100 shares, in this case, actually, we collect back $703. Now, let's go back to the Excel spreadsheet. Now, you can see that, okay, this is where the $703 actually comes from, right? So, how much money did we make? Okay, you can see that, okay, we have originally 32 contract, and one contract now we sell back, it's $703. So, you just use this times that, you actually collected back 22,496, all right? So, this is the amount you collected back. What is your profit? Your profit and loss is you use this amount minus off your initial amount invested, which is 19,440. That's how you get this amount, right? So what is your capital right now? Your capital will be your original $20,000 plus the profit that you made from this call option for 1 year's time, all right? So right now, a lot of you have some questions like, hey, what if a bear market happen? Why do we need to wait 1 year? Okay, once again, go through the whole everything first. Okay, I will definitely, those questions are actually the answer will come about along the way. Okay, but very good. Keep your questions coming. But we will see bear market later together. Okay, but right now, can you see that we have 23,000 in terms of capital? What do we need to do next is I go and use the capital again to reinitiate another position. And right now, okay, let's go back to Think of Swim. And right now, when we initiate another position, once again, what do we choose? We always choose the longest expiry date, right? So 2012, May 31st, I'm going to choose longest expiry date once again. So 932 days. So I just click open and I choose where? I choose one strike below the current stock price. So $62, one strike below is $60, right? So this is where I decide to click buy, right? And when I buy it, how much do I need to invest to buy one option? 10.55. So in a way, it's $1,000 and $55, $1,055. Okay, this is the amount that I need in order to initiate one contract. So can you see that? That's how my 10.55 actually come about. So one call option, $1,055. All right. So I use whatever profit I made plus my original 20,000 capital. You can see that right now I have this amount. I use this, divide by how much do I need to buy one option contract. That will be the number of contract that I can get, right? So in this case, I can buy 21 contract this year. And the total amount I invested is this amount. So now, let's take a look once again. It's every single year we just rinse and repeat the same thing. Now, 1 year later, let's take a look at what happened to the stock price of QQQ, all right, 1 year later. So now it's 2012. We just go back go down 1 year down the road. May 2013. And once again, you chose the expiry date, the same time that you just close your position, because we initiate 31st of May, we just close it on 31st of May. Right? You can choose any day, not just 31st of May. You can choose any random day that you want. But using this example, I'm just using 31st of May. So that's easier for you guys to see as well. So right now, can you see that initially my option contract actually expires on 2014, December 19, right? The exact same day. So I'm just going back. And right now your contract, because of 1 year has passed, from 900 over days, now become 567 days. But once again, all you need to do is go and close it, right? Just close it. So what you need to do is find back the exact same contract that you have, which in this case is $60 strike price. And your $60 strike price right now, Nasdaq is increased to $73. Can you see that? Because when Nasdaq increase in value, when you sell back this contract, right, you will make money for sure. Because when the stock price increase, your contract worth more. So when you sell back, how much can you make? You actually make 14.74. Can you see that? So what is your profit? Let's take a look. Go back to the Excel spreadsheet. 14.74. It's actually, okay, let me just double check. 60, sell. Okay, this should be 14.74. So in this case, my Excel spreadsheet, this one should actually change to 14.74. Okay, so there was slight error, maybe because of the data slightly different. But can you see that? So 1 year later, when I sell back my contract, right, this amount will be 14.74. Okay, and after that, what happened is using the profits. So how much did I make for this year? I actually make $8,000 over dollar. So adding all my capital and everything, how much do I have right now in my portfolio? I have $31,000. So once again, using this $31,000 we have, we reinitiate another position. Okay, so that's why we go back here the same year, we open the longest contract again. Can you see that? We open the longest contract, 595 days, and we just do it one strike below. Okay, this is the last demonstration. I want to do it for you so that I want to explain to you the thought process. So 73.25, the one strike below is $73. So you just buy. Okay, can you click? You just click buy. You will realize that your amount that you need to invest in is 6.38. Okay, so this is where the 6.38. So this is also needs to be changed a little bit. So this should be 6.38. Okay, and this will change to 638. Right. So that's how your QQQ call option will cost you one call option $638, and you use the amount that you have in your portfolio right now to just buy again. reinitiate the longest contract and you buy 49 contract, and eventually when you sell it off, that year, QQQ price continue to increase. So can you see that? Well, this year is really amazing because you can see that your profit, right, from $8,000, it actually jumped to close to $60,000. Why? Okay, let me just demonstrate one more time. You just go back to 1 year later, which is 2014. And then because this is a Saturday, you can't do options, you can't trade. So you just go to 31st of May. And 31st of May 2014, okay, you can see that at back then, we initiated a position at 16 January 2015, right? So we need to close it. So when we close it, we need to close a $73 call option. And okay, this part is a little bit funny. So apparently, eventually, when you close it off, right, you realize that there's no $73. It's because this is a very special case that, eventually this option become not so popular. So eventually there is another, basically like there's no open interest. But just to simplify things, I just use any number that maybe I just use 72.63, okay, just to demonstrate to you what would that look like. So when you sell off, let's just assume it's a 72.63, the call option contract, right? You are getting 18.65 back, okay? And if you do this, right, so that's how your this is where it come about, 1865, right? 1865, and that's how your profit for that year is $60,000. So your total capital plus your initial capital will be close to 100K. So using $20,000 in about 3 years' time, you have close to $100,000, right? So this is what I mean, okay? But once again, this is a continuation planner. Some of you may be wondering, wow, but Chloe, certain years lose money, right? Which is true. Can you see that over here? When you see a bracket, that means this year you actually lost this amount of money. So instead of making money that year, because the stock price didn't move. Why? You can see that initially, right? Okay, this is back in 2014 to 2015. There was a period of time for this 1 year, QQQ barely moved, okay? Because it barely moved, your option, due to time decay, it's eating up in its value. So that's why this is like to a lot of people will be like, wow, I just lost like $100,000 in 1 year. But if you think about it, right, all you need to do is to continue to trust this strategy, right? Continue to trust this strategy, because what you need to do next is to really replicate the same process that I just explained to you. You use whatever money that you still have, right? Because you still make money nevertheless, right? You make this amount of money and you go and continue to reinvest, and you buy a call option again. And then 1 year later, close it. Your portfolio will have grown, okay, to $400,000. So from $136,000 in 1 year's time, if you just trust this strategy, repeat it, it's 400K. And then you just repeat it one more time, you're reaching your 1 million. This is how many years? Guys, 1, 2, 3, 4, 5, 6, 7. In 7 years' time, from $20,000, you actually compound to more than $1 million. Who think that this is amazing? If you think this is amazing, right, please type Super Mario, okay? Because this is what exactly this Super Mario strategy is about. So how is this different from Sean's strategy? Sean's strategy used on SPY, but this strategy is on QQQ, all right? So for those who just come in, you don't know what is QQQ, make sure you watch the replay so that you understand why we chose QQQ for this strategy as well. So yes, if you look at Steven, like what Steven said, right? You look at 5-year charts, QQQ is bullish all the time. And if you just give yourself longer time, right? Like more than 1 million, let's talk about 10 years time. Your $20,000 capital, actually, like, just hold on to like until this year, right? Just continue to rinse, repeat, buy, sell, buy again, buy, sell, buy again. Just repeat this strategy. This year, by May, which is today, let's talk about today. Your option, right? would have actually grown to this size, guys. Can you see the number? You look at it, it was like, what? It's 8.5. It's close to $8.5 million. When I look at that, I was so shocked. Okay, of course I didn't execute this strategy 10 years ago. If not, I would be like sitting on 8.5 million. But can you see the power of you investing in a very, very great investment vehicle? And in this case, it's QQQ, right? And some of you may be wondering, hey, Chloe, last year was an exceptional year because of COVID-19, the tech sector, everything really got supercharged, right? Then cannot be like that every single year. Yeah, true, right? So that's why even though we ignore this 8.5 million kind of growth, right? You just look at like this, it's also considered very good, which is your $20,000 actually increased close to $3 million. This is like in about 10 years times as well, right? So goes down, you're out of money. Yes, correct. So that's why what John is saying, that the reason why we are talking about at the money is because you can go and do back test on your out of money QQ strategy. I have not done a back test on that yet. Maybe you will get higher return. I'm not too sure. Okay. But the thing is, I really just want to keep things simple. And that's why I'm just talking about one strike below, which is at the money call option, right? So you buy QQQ, next year stays flat, right? It's possible, Xiwen, like what you mentioned, right? It's possible that when you buy QQ this year, next year QQQ may not be making you money. But what is the horizon that we're looking at for this plan, guys? What is the horizon we are looking at for this plan? What is the answer? How many years are we looking at for executing this plan? It is 10 years. 10 years, right? So what do you think will happen to QQQ 10 years down the road? In my opinion, I think I cannot say 100%, but there's a high chance, very high chance that these companies that QQQ is tracking, they're going to make more money because they do more good to the human, to the human race. And then that's how they prosper. When they prosper, the stock price will increase for sure one, okay? But once again, I cannot say 100%, but I think the probability of you making money is so high as long as you are willing to stick to the plan. Right? Just like what Xiwen say, even though you suffer the first year, let's say the first year you suffer losses, okay? But whatever money that you have, right, you can continue to roll, like just go and execute again. Because if you suffer losses, like let's say 100K, right? I was like, wow, suffer 100K already. I think this is a bad strategy. If you don't continue, then you're missing out your 300K gain in one single year. So once again, like there's definitely drawdown. Okay, even for Sean's strategy on SPY, certain years SPY didn't perform as well. But once again, it's a 10-year plan. And if you're willing and you're disciplined enough to stick to a 10-year plan, I think the probability of you making money is really so high. And crash one year, earn the other 9. Yeah, exactly what John said, right? So of course, if you are thinking about, hey, Chloe, what if I don't have a $20,000 capital, right? Then is it okay if I start smaller, right? You can do that. Let's say you start with a $5,000 capital. You can also compound your $5,000 to, in this case, if you are like just hold on for years, this is also cross $1 million figure. But for those who are working, and you still have active income, right? Let's say you start with $5,000, like what Xiwen say. Hey, what if the first year I buy, it crashed? Let's say I lost like maybe 50% or 70% of my capital. Then what to do next? You add in more capital, right? Because you are making money from your job, you have your active income, you go and pump more money. Let's say you pump another $5,000 the next year, and then another $5,000 next year. Your wealth will increase one. You just have to trust the strategy and be emotionally stable, right? I think this is a very, very safe strategy in my opinion. So why buy call? Okay, harvest. Okay, I think you just came in, right? Make sure you just watch from the beginning because I did mention what is the beauty of QQQ compared to SPY right now. So Yeah, very good. So Serene is asking, oh, wow, Chloe, this is like, okay, but once again, I just want to show you the final picture. Final picture is like for the past 10 years, if you executed this strategy, right, just just be emotionally stable and stick throughout the plan, your return would have been like this, 4,000 over percent. Oh, sorry, 42,000%. Okay, as compared to you just buying the stock, which is about 400%. Right? So it's like 100% difference if you know how to do options correctly. Right? So yeah, Angela, so if you are I actually mentioned about the options before, the rules about options. Go and watch this replay if you are not familiar with options and you want to learn, right? Okay, I think it's very important you guys continue to learn. For those who have not learned options before, do consider joining OMI. I really think that this is a great course that really crash everything that you need to learn about option strategy, and we give you very powerful in-depth step-by-step. So for those who have attended OMI, what do you think about OMI? Let us know so that we can also continue to improve on that. But this is the power options. So I want to answer one of the questions that just now Serene is asking, right? So got promo for OMI. Ismail, yes, we do have a promo, but do join my Telegram channel because I only have a promo for my followers. So join my Telegram channel. After this, I can actually post the link inside as well as some additional discount if you actually join through my promo, right? So open interest is important. In a way, actually, it is important, but actually as QQQ and SPY, both of them have very, very high open interest if you just look at it, right? So because this is like definitely one of the very few actively traded ETF, all right? So the open interest most of the time is no problem one, but all you need to do is to stick to the plan, buy one strike below. So this is a rule. So now let me answer the questions that just now Serene is asking, right? So can I actually apply this onto growth stocks? Okay, let me just share the slides so that you guys can see. All right, wow, it's like an hour already. Oh my god, I think this is going to be like 1.5 hours. Okay, so okay, I'm just going to go through very, very quickly. So can you actually do this option strategy on individual growth company so that to increase your return? The answer is, okay, those who attended OMI before, the answer is definitely yes, okay? And that is why in OMI, we actually talk about strategy X, right? You use it on growth company, but it must be good company, okay? You cannot just do on random rubbish company. You will end up hurting yourself a lot, okay? The reason why I'm so confident about QQQ is it's like an instant diversification. You have an instant top 100 companies in your portfolio. Very safe, and that's why you can do this Super Mario strategy, like really, really supercharge your return. But when you are doing on individual company, you have to do more work. What does that mean is you really have to make sure you understand this company. Is this really a great business? Does it have like even more future growth potential, right? And like there's so many other things you need to look at when you decide to invest in individual growth company. But if you manage to find good companies that will continue to outperform the market, then definitely your return will be even higher. So for example, like let's talk about like let's say Facebook, right? 10 years ago versus 10 years down the road, the return in about 10 years time, in fact less than that, it's 760%. Versus just now you saw QQQ, it's about close to 500%, right? So this is another 260% more, right? Another one, Apple, in a 10 years time, 950%. So almost double the return versus QQQ, right? And if you look at like, let's say Amazon, 10 years, it's like 1,500%. So once again, if you can really find great company and you invest them at a very good price and you repeat this strategy, your return will definitely be way higher. Because at the end of the day, individual companies can outperform index if you really know what is a good business to invest in. But that's why this will require more work, definitely, because you need to go and spend effort to understand individual companies as well. So once again, it's really depending on you. Do you want to be a more active investor that you really like don't mind spending more time and effort to dissect into individual companies so that you get more confidence and more conviction before you invest, or you want to be more passive. Hey, I just buy the index, I buy do the Super Mario strategy on the index and just let it grow. Or you can also do a combination on both. Okay, in fact, I'm doing combination as well, so that my one part of portfolio is already well taken care. At the other hand, I also have good growth company that can also continue to accelerate the return. And this is very crucial. And for myself, right, in fact, we do have our own community called Buffett Online School Stock Idea, where we actually publish like very in-depth stock dissect, okay, stock research report for our community members, so that they can really understand, okay, for those who are interested in learning and really like investing in growth company, right? You have to make sure you understand these businesses. And that's what we do, right? You make sure you publish the report to help our students, our people in the community understand better, all right, to see whether is this the right business for them, all right, and before they invest in anything, right? So some of the companies that we've covered so far, right, like C Limited, Aiden, Berkshire, there are many companies, because every single week we actually publish a report for our community member. So one of the stock we actually covered back then, C Limited, we covered back in April 2020. So if you find this date familiar, that was just like about 1 year ago, right? About 1 year ago, when COVID-19 really hit like the whole world hard. C back then was trading at only $44, okay? And when we published this report, soon after, C Limited, because it's like really driven up the business, right, by COVID-19, the stock price like right, really shoot through the roof. So like the ROI is like close to 400% in like less than 1 year's time, right? So this is just one of the stock idea that we have covered so far in Bossy. And on top of weekly stock ideas, right, what we do for our members is we actually do monthly webinars for them as well. And when we're doing webinar, we are actually inviting a very, very special guest. And her name is actually Mary Buffett, all right? Because actually Buffett Online School Stock Idea is actually started by Mary Buffett herself. She really wants to make more people understand investing better, become better investors. So every month we actually have a webinar with her, and we also dissect different companies, all right? We will actually choose one of the good company of the month so that we can also dissect together. So back then, that was last year, November, we dissected this company called Berkshire Hathaway. And back then, when we talk about it, right, it was really undervalued, okay? We understand the fundamental plus the valuation. It was really undervalued. So back then, Berkshire was 227. And after we talk about it, we publish a report, we talk about it in our webinar. Today, right, has gone up to like $287, right? So it's like it's quite a decent return in my opinion, about 6 months time, close to 30% return. So once again, okay, so some of you are maybe wondering, oh, you are a member of a BOS, okay? So BOS, right, okay, this is different from BOS, or this is Buffett Online School Stock Ideas, really focusing on publishing the reports, as well as every single month we do have a webinar with Mary Buffett. This is actually on top of BOS. This is additional paid subscription, okay? But once again, like I mentioned before, if you stay all the way till now, right, I do have a very, very special gift, okay, for all of you, 200 over of you watching right now, because it's Visa Day, okay? And Visa Day, we want to celebrate with everyone. We also want to give you guys some additional gift as well, all right? So, like I mentioned earlier, we do want to have like this amazing gift that it's the first time that we actually roll out to the public as well. So we hope that you will really love this gift and really start investing much safely as well. So what's going to happen is, if you decide to join us, okay, go for Bossy, okay, Buffett Online School Stock Idea, you just want to see, hey, how are the reports can help you better? How are the webinars, the past webinar available, the future webinar, how it's going to help you? So we do have a free 1 month access for all of you, all right? So this is something that's super exclusive. You have not done this before. So yeah, we just want to give it out because it's Visa Day so that more people can really learn how to invest safely for themselves. So all you need to do, right, after you join us, right, you will actually be accessing to this platform. It's called Buffett Online School Platinum Platform, right, where all the past reports that we have published so far, you can access that. On top of that, all the past webinars we have so far, you can also access that. In fact, we even have a value investing course, right? It's a crash course that's inside. You can see there's a crash course there, right? You can actually watch through the crash course videos and understand how should you be investing based on value investing. So we teach you how to invest. On top of that, we also share with you what are the stock ideas of the month as well from Mary, from us. So yeah, so how can you join us? Completely for free for the first 1 month. Just go to this link, rebrand.ly/bossy free. Okay, so because it's really a free gift from us, and for after 1 month, should you decide to say, hey, I really love Bossy and I just want to continue to have more information, more resources from them, you can continue to stay subscribed to us. It's $29 per month. That's it. Okay. However, if you say that, hey, after 1 month, I think it's really not suitable for you because you're more like towards trading whatsoever, right? Then you can just actually cancel it anytime within this 1 month. You don't have to pay any single cent. All right. So because it's a free gift for you for this just today, right? This is a free gift for you. All right. So all you need to do is go to this link. So maybe can someone just help me just to type this link inside the chat so that everybody can also access to that. And like I mentioned, I also have one additional free gift for you, okay, which is like just now I did mention that ETF, it's a very, very great investment vehicle, which you have actually seen, right, from QQQ, from buying SPY. Actually, they already give you very good return. But can you actually do even better than that? Or is there any other way, other ETF that could possibly help you to stabilize your portfolio better? So inside my ETF course, I really teach you step by step how you can do that and how can you select based on what criteria. There are certain criteria, just like stock ETF has certain criteria as well. So if you decide to join Bossy completely for free today as well, this is also free. Okay, so everything is a free gift for you. All right, so thank you so much, Elaine, and thank you so much, Nico, yeah, for helping me to put that link. So yeah, so once you join us, all you need to do is to you do have to key in your credit card details though, because if you decide to continue to renew, the credit card will deduct $29 after 30 days. Okay, but it will only be deducted after 30 days. All right. But I know some credit card company, they like to charge $1 for, I don't know what reason. This $1 is not charged by us. It's by your credit card company. Maybe they need to do certain verification. We are not too sure, but we do have some scenario that some people need to pay $1 for the first transaction. Okay. But once again, $1, if you can access to everything, okay, do you think it's worth it? Okay, I really think it's damn worth it. Really, like we put in so much heart and soul to put out all these reports for you. I really hope that you guys can take it seriously and go and read it. Go and watch all the webinars available as well, right? And in fact, we are having our next webinar with Mary next month because every single month we have one. We just finished it last like about 2 weeks ago. Yeah, so it will be next month. So, but in the meantime, while waiting, just go to our platform, go for all the reports, all the webinars that we had in the past. All right. So any more questions? Okay. In the meantime, I'm just going to, before that, just make sure go and follow my Telegram, t.me/alligator investor, so that you can have the summary as well as the calculator, the spreadsheet that I showed you just now. I'm going to put it inside, as well as the gift details. Like I mentioned, I just want to do a summary and I will put it inside as well. So just go and join my Telegram channel for those who have not. All right. So let's see, do we have any more questions? And I'm just going to put this and ちょっと待って。はい。ありがとうございます。Is it right? Yeah. So try help us to put up the link. So all you need to do is go to rebrand.ly/bossyfree. So which support email to continue? Oh, fantastic. Why not just do a share screen? So I'm just going to do a share screen. Okay. So for example, rebrand.ly/bossyfree, right? And you can see that. Okay, so if you go to this link, you will see that there's basically some of the summary. What will you get once you join our stock idea community. And then you can see that right now everything is free. Just click continue. Today you literally pay nothing to us. Oh my God, how come I have other people's detail here? I'm so sorry. Okay, I just exposed Mr. Chan to the public. Okay, so what you need to do is to fill up your name and everything, and you just press continue, right? Okay, you have to fill up lah. Okay, you just fill up accordingly, and you have to make sure and just my detail came out. Okay, I'm just going to do a dummy email. Okay, and Okay, dummy. Hey, but make sure when you decide to subscribe, don't put dummy details inside, because we need your email address to give you our access to the platform. All right. So yeah, you just put in your credit card detail and submit payment. It's $0. And after this, right, let's say you want to unsubscribe, right? You just email to us. Okay, can you see that there's a support@buffettonlineschool.com. This is where you can email to us any question regarding Buffett Online School stock idea. Or for example, when you actually, subscribe and then you still don't receive email from us for the next 24 hours. Okay, give us some time, 24 hours. We will send you an email. Should you not receive any email, even after tomorrow, right? Make sure you write to us as well, so that we can we can make sure we send you again. And you will also see that apart from the platform, which I show you just now, right? Let me just do a demonstration. What kind of platform will you receive? But in the meantime, you will also be joining a Facebook group, and that Facebook group is only for our stock idea, Buffett Online School stock idea people, right? So inside that welcome email, you will have your Facebook group link, a Telegram link only for our bossy students as well. So that make sure you go and join all of them, because whenever we publish a new stock idea, a new webinar, the webinar date, everything, we will also announce it inside. So make sure you go and join it. So that you won't miss out our latest activities as well as the latest ideas and everything. All right, so let me just go to edit. Okay, in the meantime, let me just show you what would the platform look like, so that I can assist you to navigate better. All right, so wait, chotto matte kudasai. Launch. Okay, all right, so preview. All right, okay, so let me share screen again. So can you see that? Okay, firstly, when you join us, you will receive a welcome email, and that welcome email will have all the gifts that I just mentioned, including access to this platform. All right, so you will see that there is a welcome video from Mary Buffett, and like for example, our latest stock ideas are all here, right? You just have to click it, right? For example, we just published a report on snow, right? Why is snow? Is it an investment that's worth your attention? We actually have a very in-depth research on that, so you just make sure you go and read it. But you can see that just mouse over to stock idea, and under United States. Most of us invest in the US stock, right? So you just go to United States. There are so many reports for you to start, learning. Even we publish before we even publish the next one, right? So for example, Mary Buffett webinar, you can dig back to 2018, right? But you want to watch the latest one, it's 2021. All right, make sure you click the 2021, and this is where we go through certain deep dive. And crash course is like what I mentioned earlier. This is additional bonus that we have for our community member on value investing. So we even teach you how do you evaluate good company, fundamental analysis, as well as like valuation. So inside here, there's also a calculator for you, right? There's also a calculator. It's called a BOS calculator, but you need to watch the video so that you learn how to use our calculator to calculate the intrinsic value and everything. Right, so that's more or less for the platform, but there's additional Facebook group which you will only be able to join in once you join us inside our subscription, right? So we will approve you accordingly. So let's see whether we have any more questions. May I check how to join OMI? Okay, fantastic. So PE, make sure you just join my Telegram. Later on, I'm going to post a special in fact, there's a discount that if you join through my Telegram channel, I'm going to give you a very special promo link, and you get additional discount on top of and this discount is not available to the outside public. So join my Telegram channel. Later I'm going to share with you how can you actually join OMI at a discount compared to the public. Okay, so what is the recommended position? So it's really up to you. Okay, for different people, like for example, like depending on what type of investor are you someone who are relatively passive investor, you just want to go for a passive way, you can consider allocating more position into the Super Mario strategy. On the other hand, for example, you are like me who want to have, like, because I also invest in growth stock myself as well, so I will use Super Mario strategy as a complement. So Super Mario strategy will be about 10 to 15% of my portfolio, and then the rest I will still invest in individual companies. Okay, I will also do options, I will also buy the stocks. So there's no one size fit all, but you have to see what are you comfortable with and what is your goal, right? So what is your Telegram link? The Telegram link is this. It's actually under, it's like, can you see there's a scroller here? T.me/alligator investor. So T.me/alligator investor. All right, so I'm just going to add that. Okay, so yeah, this is the Telegram channel link. You just go to, just click this, or if you have already Telegram, you have Telegram already, just go to search Alligator Investor. You should be able to find me. All right, so that's any other ETF that can be done? Karen, in my opinion, right, I think most importantly is you have to understand what is your objective of why you do certain ETF. There are definitely many ETF available, which I actually cover much more in depth, how to choose a good ETF in my e-course, right? If you join Bossy today, you'll get it for free. But why I choose QQQ is because I really find it's undervalued, and it's right now, it's been proven, it's been growing all the time, and tech is a really great sector. So another one you can consider is SPY, but I think SPY is not as attractive right now compared to QQQ, right? And if you talk about other ETF, then you have to look at how liquid is this ETF. It must be an ETF that a lot of people are willing to buy and sell, and that's how there is also more options and more open interest as well. So that's why I chose QQQ, right? So how to assess? So what you need to do is you just join these the Bossy that I just mentioned, rebrand.ly/Bossy free. Inside the welcome email, you will have my ETF course. It's also instated inside the welcome email already. So make sure you join that. So in the meantime, I just want to confirm some people who have already successfully joined us. I'm just going to name out some of you. Okay. Okay, give me a while. Okay. So we have Winston. Okay, I'm not going to read out your full name. Okay, Winston. We have Lillian, Darren, Kopun. Okay, Rosina. Okay, EG, Kimwee. Okay, So basically, you guys have successfully joined because I already seen your name inside the platform, which is the BOS Platinum platform. So for those who I have read out the name, right? Make sure you go and check your email right now. You should have already received an email from us. Just make sure you go and whitelist it. If you don't see it in your inbox, go to either your spam box or could be your promotional box, and then just drag it to your inbox so that you officially whitelist us, right? And from there, you can actually get access. In fact, we are publishing a new report every Monday. So just wait a few more days. We will be publishing a new report as well. Okay, so can I join the free Bossy? You join this month. So Saki, if you already joined this month, you are already inside Bossy, right? Okay. So yeah, it's an exclusive offer for new members. All right. So once again, I really appreciate you joining us. But yeah, you just make sure you make enough money to cover your monthly subscription, which is only $29 a month. All right. So that's all I have to share. Any more questions? 4 ETF is a basket. If 4 die, other can survive. Hopefully the whole team. Yes, ETF is a basket of company, right? So that's all I have to share today. I hope that you find today's sharing useful. For those who have not fully comprehend what strategy or what is the investment philosophy behind why we execute the Super Mario strategy, then make sure you just go and watch the replay again, right? So I will also post the replay link inside my Telegram, and so that you can always recap along the way. And most importantly, make sure you do your due diligence. I'm going to post the Excel inside my Telegram as well. So when you join us, okay, go and download the Excel, do the back testing one time for yourself, so that you will understand the whole psychology behind how you do Super Mario strategy, right? So thank you so much, Saki, and thanks everyone for joining us. And I hope you actually take away from this session. And for those who are already inside my Telegram, later on I will post whatever the summary that I just stated and all the links as well. So I will see you in my Telegram channel where I'll continue to update even more. All right. So see you guys. Good night. Bye bye.